Morning traders, it's 8:02 a.m. Chicago time on Tuesday, the 25th of October 2016. It's not 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for joining me this morning. The news flow is dominated by some good news out of Germany. The IFO number is strong, and overall, we're also dominated by the earnings that are trickling out. Um, Visa announced that it beat, among others. This afternoon, though, as far as earnings are concerned, this afternoon, pay attention to the fact that Apple announces after the market close, and that's likely to bring volatility at least into the ES and the NQ. Today, as far as what we're expecting, Richmond Fed at 10 Eastern, expecting -4. Consumer confidence index also at 10 Eastern, expecting 101.0. And then at the same time, we're getting IBD tip economic optimism, expecting 47.5, all three numbers for October. And then looking for speakers, we have BOE speaker Carney at 10:35 Eastern and ECB speaker Draghi today. I want to pay attention to that. He will be releasing a transcript of his text, of his speech, and that's at 11:30 Eastern. And then at 1 o'clock, we get Fed Speaker Lockhart again. After the market, we're expecting Apple. The earnings expectation is $1.65. We're getting also AT&T at 74 cents. Actually, Visa here it says is aftermarket, but my news feed says that it has already reported. So, nope, it was corrected. Nope, yep, it's already reported. Okay, so that's what we have on deck for today. Let's take a quick hop on over to what we expected yesterday. And see where we are versus where we expected to be. Yesterday we had a gap up. We broke out of this downward channel. We gapped above the two highs that we put in. This is a weak high right here, and the expectation is that it would chop around on the open, but I was looking for responsive selling towards 2138.50 or so, and then for the market to bounce it back up and basically maintain around this 44.50, this purple line here, which is a low volume node, a composite low volume node. In other words, the market traded up top, it traded up here, it traded quite a bit up there, July, August, and parts of September. Then it dropped, and then it traded down here for a while, and that was the dividing point. That's the low volume node. And since we have balanced, dropped, tested the heck out of it. Actually, here's the point of control of the lower balance. And then we gapped in there. It essentially stuck in between the two balance zones. This was actually how the market played out for the day. Almost a duplicate of this. I'll show you that in a minute. The secondary hypothesis yesterday was for an attempt to respond, to find buyers, aggressive buyers to push up to 53. And then the tertiary hypothesis was an attempt higher. I did expect the overnight high to be taken out early, as mentioned, to complete the to likely complete the move from the overnight session, and then to find sellers and rotate down and start moving back towards the point of control, which is also the prior day's point of control, Friday's point of control as well. So we got hypo 1 here, a drop, and then sideways in the low volume node. Here it is. So just like you saw in the prior, just chopping around, drop. It only got to 40.50, and then back and chop around in the 44.50. The point of control, The point of control is right here. I'd have to expand this. It's so tight yesterday. But you could see here the point of control is right on top of the composite low volume node. The composite low volume node marked right here, and the point of control is right on top of it. This is typical behavior um, in this market, in the auction. Once uh, both the upper balance and the lower balance have been kind of thoroughly tested, and they definitely have. I'll show you an image of that. And then the market is basically trading in between, and that's where we are. So here's the lower balance. So we dropped on the 9th, and we've traded quite a bit down here. So you could see this is the cutoff point right here. That's the 44.50, and we're pushing to hold the upper balance up here after testing out the lower balance, and that's what things look like. You can see it's very chunky in here. The trading is essentially happening in chunks, lower, upper, lower, and now we're up here. Okay, seems like a noisy image, but it's pretty straightforward. I'm going to show you the bigger picture a little bit. This is my flex chart. I don't usually show this chart. It's what I work off of to create those flex levels, but it shows us here where we've been since the rally in July to new highs, and essentially as I said in the prior image, let me change my pen color. As I said in my prior image, we just keep trading in chunks. You see the market moves out of balance, back into balance, moves out of balance, balances out, balances out, balances out, and then breaks. This is how the market is. And identifying these areas, identifying these balance areas is what the microcomposites are seeking to do. These smaller multi-day profiles are seeking to fill that in. Here's your 44.50 right here, and you can see how before yesterday it was a clean. You could see how it was a clean low volume node, and yesterday filled it in a little bit. And what we're doing is we are starting to form a profile that is a lot more Gaussian um, to kind of charge for the next move. My charts are up. It's broadcasting, so I'm not sure what the issue is, but the rest of you hopefully are seeing this chart. Anyway, so that's where we are. Yesterday was a very choppy day. One of the things I really want to impress upon you this morning is just because these hypos may work, or the market may play out what a hypo does not mean that you should have dominated it, that there's money to be made. Now, there's a difference between, so if most people who trade, their focus are, I'm here, I'm investing time, and I want money. But it makes it very, very difficult to do this in the long run if your focus is just to extract something out of the market every single day. Um, it's not realistic. It can happen. I've had runs of months where I have not had a losing day. It's very uncommon. I'll be the first to admit that. And it's so your focus, and the reason I'm doing these videos is to keep you on top of the auction, right? So it's not always true just because we say this is what's likely to happen. If this is likely to happen, then we're going to just make money hands over fist if the market actually executes one of our hypos. It is simply a road plan. It's a plan for where we're likely to head and what areas we need to be cautioned of or be aware of, so we can respond in those key areas. That's what your hypos are for, and hopefully you're doing them for yourself. Do not wait for me. The idea here is to transfer this knowledge to you, not to keep you captive to this broadcast. Anyway, The overnight session has been drifting up. We have a Gaussian profile here. Notice that once we've moved the point of control up in yesterday's overnight session, we held it up here and we're shifting it up. This is revealing that we are accepting these higher prices. Volume is drying up. Volume this morning was about 90,000. It just picked up another 30,000 or so in the last maybe 45 minutes, 50 minutes. And it's pretty dry. This is portending potentially a slow trickle up. This is the kind of behavior we see. There's very little participation here. However, this morning, once they've made the high was made at 49.75. We've had a pullback to mid, and then we have the extension move here, and it's likely to continue to trickle down as we move in the short term. So not much to glean from the overnight session other than it was fairly balanced, and it's holding on to those to the values, the higher value or the higher point of control that we've put in place yesterday. Let's extend this profile forward to include yesterday's action. It's filling in 44.50. This morning we are opening in range, just about in value. Yesterday's profile is balanced. The value area is valid yesterday, and so what I'm expecting this morning is an open auction. I'm expecting chop this morning. It is a Tuesday. Volatility, statistically for this product, volatility is highest on Tuesdays and Thursdays. So Tuesday, I expect that since it was light overnight, I expect some of that volume to catch up. Maybe it'll carry into the session, but the expectation is it's likely to catch up. We still have a gap zone below. I need to mark that on the flex charts. So we still have an unauctioned area below, and what I'm looking for this morning is an attempt to push higher, and then I'm expecting it to start moving towards this gap zone, pushing down into the prior low, and then poking down, and then basically coming back as it's done in the past. We are completely imbalanced. I'm not expecting this market to move into a trend unless news comes out or something happens that would cause that. So the primary hypothesis, chop, test lower, push out of yesterday's range into the gap zone, look for the mid of the gap. I'll mark it on the chart if you get flex levels from me. And then it's likely to bounce back up and then just dilly-dally and chop into the close. That's the primary hypothesis. Secondary hypothesis is we open and chop, we continue to move lower, just start to move lower, poke down into the yesterday's lower just below it, and then start to trade the other side of the range and push back to yesterday's value high and the overnight point of control. That's plan number 2. That's all the time I have. Anyway, stick with it. You know, it's not meant to click in one day. Just stick with the program, follow your plan, and hopefully you'll see the results at some short point ahead of us. Good luck and take care.